All right. We are live. Good morning, you magnificent melonheads. Happy Tuesday, everybody. It is Tuesday morning live stream. Looks like markets are catching a bid, finally getting a break this morning as this monster rally in the U.S. dollar is, I guess, just going to pause here, catch its breath. I'm not going to say it's a dead cat. I'm not going to say it's another bear market rally. All I can tell you is this ridiculous fall since last week, really, if you take it all the way back to Jackson Hole a couple of weeks ago, it's going to take a break today. And we're going to take a look at some of the charts today. You'll see that we were due for this. And so dollar heading lower, that means stocks heading higher. That means commodities heading higher, at least in the short term. We'll see what that means possibly long term here. Also, a lot going on in the world. I threw out a video late last night. This is a big story. I'm surprised it's not front page news right now, but it looks like an attack on the Nordstrom pipelines, both 1 and 2. There was a very sudden and rapid pressure loss in those pipelines yesterday, all within a very short time span. You had Nord Stream 2 went down first, and then you had Nord Stream 1. Both main lines in Nord Stream 1 went down. Now, there was no gas flowing through those pipelines, but those pipelines were filled and pressurized, right? Just because they're not operating doesn't mean they're not full of gas. Well, the pressure in the lines very abruptly went to zero, and there was a big gas leak. All right, now, German authorities are suspecting it was deliberate, although there is no word yet on who it is. We're going to talk a little bit about that and see what might be going on there. And let's say hello to my man, Mish the Mod. Let me bring him up here. My goodness, I was a little late starting the stream today, and I'm unprepared. There we go. How are we doing today, Mish?
I'm doing great, man. How you doing?
I am doing fantastic. Has anybody caught up with you in the wild to claim their Mercury dime yet?
No, I got a free Mark dime in my pocket at all times now.
Oh, man, I'm going to start following you around, and I'm just going to tap you on the shoulder for a Merc dime every time, day in and day out.
Go to super chat real quick, sir.
I did. Hello, Mr. Zarkos. Whoa. Whoa, Mr. Zarkos. Thank you, sir, very much. The pink one, that is a new one. And he says, a big thank you for your very informative videos. I also want to thank Jay, Joe, Boris, Emmanuel, G, Klaus, Ursula, Vladimir, and Vladimir for their exquisite bear markets. Well, that is a long list of thank yous. This is starting to read like an acceptance speech at the Grammys. Yeah, thanking all of the muckety mucks who are in charge of this world for the mess that they have created. And look, folks, we all have to live in this mess, and there is no shame in trading it and profiting on the way down because it's going to happen either way. You might as well position yourself accordingly. And Zarkos, I remember we were talking about your champagne bath a few days ago because you were short. I forget, was it the NASDAQ you were short? I don't remember, but congratulations on that, sir, and I'm glad you can see the silver lining in this very, very gray cloud. We're going to try to be a little more positive. I know I'm a perma bear, doom and gloom. It's kind of my thing. I got to be me, folks. But we'll look for silver linings on the way down. One of those silver linings is you, Zarkos. Thank you very much for your wonderful super chat, and for also thanks to Jay, Joe, Boris, Emmanuel, G, Klaus, Ursula, Vladimir, and Vladimir. I'm sure there's a few more in there we could throw in the list. All right, guys, let's take a walk through the indexes here and see what we have going on this morning. Looking at the S&P, it is currently set to open about 45 points higher, or 1.2%. We were a little bit higher early on, just off the highs this morning, but still looking pretty good. The Dow is up 285 ahead of the open right now, looking to open 1% higher. And the NASDAQ leading the way, up 161 heading into the open, or 1.4%. So stocks looking like they're going to have a pretty good morning. We'll see if that one holds. Inversely, looking at U.S. bond yields, they are mostly lower this morning. Looks like the very long end of the curve, the yields are still a little bit higher, so still a little bit of selling going on at the long end. But for most part, bond yields are heading lower this morning. Again, yields lower, that means prices heading higher. That means people are buying bonds. And let's see what else we've got. The DXY, or the dollar index, I think this is probably what is responsible for what we're seeing this morning. The DXY is at 113.85, down off its highs. A couple hours ago, it was at 114.2. I saw we went as high as, I think, 114.8 yesterday.
We did. We up there just momentarily.
Just for a moment. Look, folks, right now it looks like pretty much everything is a dollar trade right now. It's all about the dollar. That's what dominating everything. And you could argue that it's all because of the Fed. That's why the dollar is so strong, or the difference between the Fed and the other central banks. However you want to word it, it's the dollar right now. Things are going to trade inversely with the dollar. If the dollar goes higher, stocks are going to go lower, commodities are going to go lower. If the dollar goes lower, stocks and commodities are going to go higher. It really seems like that's going to be the prevailing sentiment for the foreseeable future. All right, so settle in and get used to this DXY chart. All right, this needs to be the one that you're looking at. You wake up in the morning, if you want to know what kind of day it's going to be, this is probably the chart you should go to, your first check in the morning. And this one is interesting. This is UUP, or the Invesco US Dollar Index Bullish Fund. Johnny Bravo's been talking about this one on his channel a lot. I like Jay Bravo's channel, by the way. He is one of the better technical analysts out there on YouTube. He's also hilarious and a very nice guy in person. But this is showing that the UUP, this is basically the dollar trade. This is an ETF that tracks the dollar. And you can see in this chart, this is going back to pretty much January of last year. We've been in this upward channel since the start of this year. And you can see we just got way, way ahead of ourselves. I mean, look at us up here. If we zoom in a little bit on this channel, you can see we're way up here. It just ran too far, too fast. Now, obviously, there were good reasons, right? All of these Fed hikes, and then a dovish central bank in Japan, and God knows what's going on with the pound over in Europe, and with the euro and the energy crisis. So there's good reason for the dollar to run this hard, this fast. The macro case is there, but you have to pay attention to the technicals, and the technicals are telling us right now that the dollar ran too far, too fast, and it's due for a pullback. All right, and just looking at the UUP right now, this should be pulling back to, looks like, just below 30. I'm not sure what that would translate to on the DXY. Let me bring that chart up right now. Let's look at a 6-month. And I can tell you the DXY probably needs to come back down somewhere around 111, 110 in order to get back in the range of this chart. So
it needs to retest 110.
Yeah, exactly. We need to retest the upper line here. So just an idea here. Again, not a financial advisor. Do your own research, your own DD, arrive at a decision that's right for you. But if it looks like we're in for a retest on this dollar trade, well, then maybe a short-term swing trade in some of the commodities or some stocks might not be a terrible idea. And we've got a couple of ideas for those. Namely, oil is one. I've been talking about oil for a while, about how, I've been trying to find a bottom, and the chart just hasn't been showing me a bottom here. Well, maybe this inverse dollar trade, oil is a decent way you could do that. If we're looking at the dollar heading a little bit lower in the short term, then we should be looking at oil heading a little bit higher. That's not to say oil can't go lower from here. It might. We're still dumping 1 million barrels a day from the SPR, and that's going to continue for about another month. But there's another thing you want to think about. OPEC gets together on October 5th. That is 10 days from now, or 11 days to now. There's 30 in September. So 10 days from now, OPEC gets back together. Now, the last time OPEC got together, they announced a 100,000 barrel production cut. And keep in mind, they're already missing their production targets by 3.5 million barrels per day. So they need to cut their production target, both to save face, because they're already missing their targets by such a ridiculously large amount, but also OPEC has told us that they want oil prices higher. I mean, Saudi Arabia has pretty much said $90 is where they want oil at. And we're sitting here now in the mid-70s. So if you think about the dollar could be heading lower in the short term, plus we're 10 days away from a very likely production cut from OPEC, then oil as a swing trade over the next couple of weeks, that's not a bad one to take a look at. So I don't have any position in any energy companies right now, but I am looking to start one. I'm probably going to try to swing trade this one over the next week or two. Again, this is going to be a get in, get out, not long-term trade. But that's one possible thing you might think about.
On top of that, we need to think about the SPR releases potentially ending in November, because the last one they've announced is the first week in November.
That's
And
right.
that's
Now,
supposed to be closing up that thing they've been doing.
and I mean, look, what is the reason to continue the SPR past November? Because, well, there's no midterms after November, is there? So the strategic political reserve, there's no reason to dump from that after the midterms. And look, if you want to look at it from a purely political standpoint, you need to stop dumping that SPR because he may have to do this again for the presidential election, right? He's probably going to go back and do this again 2 years from now. It's a good bet that 2 years from now, oil is going to be even higher than it is right now. I mean, there's not going to be any major new oil supply coming online in the next 2 years, not that I can see, because there hasn't been any investment for the last 7 years, really. So he's going to have to refill the SPR so he can dump it again when he needs to. So yeah, Mish, I think you're right on the money there. That the SPR releases are going to stop. That's going to be 1 million barrels per day is going to be coming of supply out of the market. You've got OPEC probably going to be cutting production. So yeah, I think energy prices will be coming back. Now, the one bullish case for the oil trade that you have to keep an eye on is the fact that a global recession will reduce oil demand. All right. If we are heading into a global recession, which it looks like we pretty clearly are, then that means oil demand is going to be reduced. Is that going to reduce as much as supply? I don't know. Also, keep in mind the geopolitical situation, the situation in Iran. You've got an increasingly desperate regime in Iran now because of the protests that are going on there. So it's not out of the question that we have even worse geopolitical situation a year from now than we have right now. So a lot going on in the oil trade, but in the short term, I think this is a dollar trade, and that's one way you could look at that. Also, the 10-year yield is a little bit lower this morning. I've been looking at this one. Speaking of another one that just looks like it got ahead of itself, check this out on the weekly candles. If you zoom in here, we have had 9 straight weeks of higher 10-year yields. 9 weeks in a row. I don't know if that's ever happened before. Looks like here was this 9 in a row, 3, 6, 7. Nope, that was only 8 in a row back at the beginning of 2021. So the 10-year yield is due for a pullback, right? Nothing goes up in a straight line forever. We're due for a technical pullback here. So it's another thing to keep an eye on here. That if we get a pullback in the 10-year yield, anything sustained over a week or a couple of weeks, that will be good for stocks also. Let's see. What is commodities doing this morning? Again, commodities likes the lower dollar, and we can see that here with a lot of green. We've got gold is up $9 or 0.5% this morning. Silver up 16 cents or about 0.9% at 1864. Copper's higher. Platinum, palladium, crude is higher by $1.21. Looks like natural gas in the U.S. is the sole outlier here, a little bit lower. Not sure what's going on there, but down about 2.3%. Heating oil higher. Gasoline, RBOB, food commodities, grains, it's all higher, folks. U.S. wheat, by the way, 877.50, up 19.50 this morning, or 2.3%.
Yeah, it was over 900 a couple days ago.
Did it touch 900 again?
Mm-hmm.
All right. Well, I think grain prices
started the juggernaut at 750 and it's just been kind of slowly meandering up.
Yep. And corn not doing so hot. It's been struggling to recapture that 700 level at 675. I am still long corn. I have some January call options in that corn ETF. They are not doing well, but I still think long term that trade could play out, although the dollar is a headwind to the commodity trade. Keep that in mind, folks. So, even I'm talking about a short-term pullback here, over the long term, it looks like the dollar is going to keep going higher through this winter. I mean, the situation in Europe, they are going to be forced to dump their currency to buy dollars, to buy energy like crazy all winter long. So even if we do get this short-term pullback, I think the dollar still heads higher in the medium to long term. And it looks like got a couple of commodities in the red down low in the ag space, but nothing too bad. All right, let's talk about the big story going on in the world this morning. The big story that should be the big story, but I guess it isn't. I was looking for it in our press, and it was in there, but you had to scroll way down. Nord Stream 1 gas pipeline hit by leaks in the Baltic Sea, according to authorities. Hit by leaks. That seems kind of mildly worded to me, Mish. 3 leaks that happened simultaneously on a very strategic, geopolitically important pipeline, all at the same time.
In the same geographic area.
Yeah. It's kind of like, a certain Russian dictator's political opponents have a habit of falling out of windows all around the same time. I guess these pipelines have a habit of springing leaks all around the same time. Two leaks have been identified in Nord Stream 1, the Russia to Europe gas pipeline in the Baltic Sea, hours after a similar incident on its twin pipeline, Scandinavian authorities said on Tuesday. Authorities have now been informed that there has been another two leaks on Nord Stream 1, which likewise is not in operation but contains gas. So be careful, folks. These leaks are contagious. Apparently, they can spread from pipeline to pipeline. Accidentally, maybe? Probably not. What are the odds of three leaks at the same time?
Probably not.
So,
Jack and I were talking about this last night when it came up, and Jack did a really good video in the very beginning. And there are very few organizations that could pull this off.
yeah. I mean, I'm there's two that come to mind, right? The United States Navy and the Russian Navy. And I'm going to throw out there an outside shot that the Chinese could pull this off, but I don't think that. I really doubt the Chinese could pull it off. I mean, we're going to draw on your naval background a little bit here, Mish. I mean,
Okay.
knowing what we know, that the Chinese, I don't believe they have any nuclear powered subs, right? They have diesel powered subs. Is that correct?
I do not know of any nuclear powered Chinese subs.
All right. So diesel subs can't stay down forever. So the odds of a Chinese diesel sub being able to sail all the way around the world, past the UK, into the Baltic Sea, no. I mean, it's
We would
no.
have clocked that months ago because it would have
Yeah.
taken them months to get there.
So I'm going to rule out China. All right. So that leaves who? Us, the U.S., and the Russians. So there's really only two organizations in the world that could pull that off. All right. Greenpeace can't do this. All right. I
Now,
would love to
remember,
blame this on the
Ting
idiots.
Tong, Ting Ting has a good point. There is a British Navy does have a nuclear sub.
Okay. Now, so we'll add the British Navy in there. So maybe we'll say NATO. We'll
Okay.
say NATO. The French have nuclear powered navals. I'm not sure if they have subsurface though. Um, but here's the thing: like, the Western press, they're going to automatically blame Putin. And you guys know me. I am not a Vladimir Putin apologist. All right. I do not like Vladimir Putin. I think he is the worst of the worst dictators. All right. At the same time, I'm not one of those everything wrong in the world is because of Russia, Russia, Russia. I think our guys suck too. I think they all suck and we're stuck in the middle and they just feed us into a meat grinder.
Mm-hmm.
But I'm putting myself in the position of Putin, right? What does he benefit from this? And, I thought long and hard on this, and Mish and I were talking about this. Does Russia benefit? And do they get any benefit that they didn't already have? Because keep in mind, the Russians already shut down these pipelines. There was no gas flowing through there. So if Russia needed to shut off the gas flow to Europe, all they had to do was close the valves, and they already did that.
Yeah.
So Russia did not gain any strategic advantage from this series of leaks.
If anything, it
Russia,
hurts them in the long run because they can't just turn the gas back on for money.
yeah, yeah. If Europe were to suddenly say we surrender, please give us our gas back. The sanctions are gone. Here, blah blah blah. You're back in SWIFT. The Russians would have turned the gas back on, started collecting that money again, or just enough to collect the money, right? Keep them addicted. But now that option is off the table. So the only thing Russia really had to gain here was a psychological blow to Europeans, right? Because for the next few months at least, their fate is sealed. I don't know enough about underwater pipelines, but I would say this thing is out of commission probably for a couple of months at best. At
Well,
best.
the initial estimate was 1 month without any inspection done on it. So I can tell you right now that means 3 months in real
Yep.
speak. Yeah. That's just
I mean,
initial.
also keep it. You gotta patch the hole. You cut out whatever was damaged. You gotta patch the hole, weld it up, do all your inspections, your quality. Then you gotta purge the line of seawater because it's probably flooded now. And
Yep.
you gotta
Yeah,
refill it
dry
with
it out.
gas. All that stuff takes time and money. And who's gonna spend the money? Who's gonna pay for it? Are the Russians gonna pay for this? Is Germany gonna pay for this? I'd imagine there's gonna be a little consternation over that also. So So the only advantage the Russians would get from this scenario is a psychological blow to Europe because the way I look at it, their fate is sealed now with this winter. Any likelihood that the gas would get turned back on before this winter sets in, I think, is gone now. So I don't see that's the only benefit the Russians get, and it costs them the option in the future of restoring gas flow for money. That's too high a price to pay. I don't think the Russians would do that. I would love to sit here and say this was Putin. I don't think it was. Now put yourself in the position of the U.S. Who benefits? Well, now Europe no longer has the option to surrender and acquiesce and abandon the sanctions and give Russia what it wants. So that kind of benefits us, right? It doesn't cost us anything. We're not going to freeze this winter. We're going to sell lots of LNG now, definitely. So I'll be honest with you, folks. I don't want this to be true, and I'm speculating here. I don't have any evidence beyond these, what we're verbalizing here. I think it was us. I think it was the States. I hope it wasn't. I really hope it wasn't.
I think it's either we had a hand in it or we're going to be looked like we had a hand in it. Does that make sense?
Yep. Well, let me ask you this. Again, drawing on your naval background, all right? Knowing what you know about our capabilities and their capabilities, do you think the Russians could possibly pull this off without us knowing about it?
No, we know. No.
I don't think so either.
Now, when
But
I
do
say
think
that, I'm classifying that if they did it via submarine, we would
Right.
have known.
Now, this happened, I read in Politico, it was in 60 to 70 meters of water, which is like 200 to 230 foot depth.
Mhm.
All right. Greenpeace didn't do this, folks. The
this-
activists didn't do this. Just Stop Oil didn't do this.
Yeah, this is a
Sorry.
special mixture. There's very few people that would, because one, it's cold as hell down there. In the North
Cold, it's
Atlantic, are
deep.
you kidding me?
Yeah.
On top of that, it's very specific people that breathe at that level.
Yep.
So, and we, there are only a few nations that have the capable of delivering people at that depth.
I don't think Greenpeace has many frogmen in their employ either. It would be hilarious to watch them train. I see all these guys with man buns trying to trying to hold the log in the surf at one. No, sorry, folks, it wasn't them. They couldn't pull this off. I
Yeah.
did see a lot of comments on my video from last night speculating that it was the activists. This was not the activists. By the way, let me bring up some of this other. Here
Some people
is
have asked, the two things that people have asked are Israel, and basically France, Britain, some other NATO country.
yeah, France would be shooting themselves in the foot because they need the power too. Israel's got more. I don't want to get into that. I mean, there's also that like everything in the world is because of Israel faction that's out there on the internet too. I
Right.
don't buy that.
Okay. I agree with you. I don't think the Mossad would do something like this anyway because they're against human suffering.
Not to mention the submarine fleet. Like, do they have the capability? I mean, they have a good intelligence network, but do they have the hardware? I mean, this is not easy to do, folks. This takes training and this takes equipment. This takes a big budget. And I'll be honest with you. I mean, the Russian submarine fleet has decayed to such a level that I'm not even sure they could pull that off that easily, to be honest with you. Not without us knowing about it. At 3 different locations simultaneously. This is showing where these 3 attacks were. This happened to 2 separate lines in the Nord Stream 1 system and the main line in Nord Stream 2. And this is separated. I think this is probably a distance of about 30 miles here, separating the 2. So not easy to do this, folks. Not all at the same time or within a few hours of each other at that depth in cold water. No. By the way, here, zooming out a little bit, if we're showing Europe, this is where this took place. We're going to zoom in on the Baltic Sea here. This is Bornholm Island. This is the area surrounding this island is where these attacks, sabotage, leaks, whatever you want to call them, where they took place. Over here is Kaliningrad. This is that Russian enclave that is surrounded by NATO countries. and that's where the big Russian naval base is. That's where they keep their subs. It looks to be a little more than 100, maybe 200 miles away from this island. So the Russians do have the assets in the area that maybe could pull this off. But again, I don't think they could do that without us knowing it, hearing them do it, seeing them do it. And another thing that worries me is like, look at this headline, right? This isn't Fox Business. Nordstrom suffers damage to 3 offshore gas pipelines. If there was any chance that Russia had done this, this headline would have been Putin sabotages gas lines. The way they're softly wording this, the network operator said it was impossible to estimate when Nord Stream network would be fixed and back up and running, right? This is written as like, wow, 3 separate accidents strike the same pipeline system at the same time. No mention of sabotage, no mention of an attack. I just don't see this. I really hope this wasn't us, Mish. I really hope this wasn't us. Let me just say that.
Yeah,
I don't.
no, yeah, that would be no. I really hope it wasn't us.
Weaponizing the suffering of civilians and allied countries would be a new low for us. I really hope we did not do this. All right. That's all. I'm going to leave it at that. All right, guys. Markets are open right now. Let's take a look real quick at what the indexes are doing. It looks like, since markets are open, we can close the futures. And let's look at the actual indexes. We've got the S&P is up 58 points right now, or 1.6%. The Dow is up 384, or 1.31%. Having a good day in the Dow right now, and it looks like heading higher. A lot of green candles at the open. And the NASDAQ is up an entire 2% right now, 225 points higher, back over the all-important 11,000 level. Was the Dow back over 30,000? Nope, the Dow is still at 29.6, so the Dow has a long way to go to hit that psychological barrier again. But the NASDAQ back over 11,000. That's a big one. Let's see what the dollar is doing. The dollar looks like, this is still the 6-month chart. Let's go to 1 day. Dollar legging up a little bit at the open at 113.85. Still well off of its highs, though. And where's the bond market? World government bonds. Looks like still lower across most of the curve, although the 10-year is slightly higher now at 3.89. Pushing 3.9 on the 10-year Treasury. And commodities are still a mixed bag. Gold is up $11 at 1644. Silver at 1870, up just under a quarter. All right, now that we've been through the indexes, let's talk a little bit about what's going on in banking and housing. I talked about this one in my video yesterday about the British pound, about how because the pound has taken this dive recently for reasons that I got into in that video, I won't rehash all those here. But they're expecting a big move from the Bank of England very soon. They're expecting a 200 basis point rate hike before November. So maybe it'll be 200 basis point hikes out. I'm not sure what the schedule is for Bank of England. They're saying there could be an emergency meeting called this week. So they're anticipating a very sudden tightening from the Bank of England in response to this fall in the pound. And that has got mortgage lenders in the UK worried. Or at least they're playing defense right now. Now, I talked about this in my video yesterday. Keep in mind, mortgages in the UK are not like mortgages here in the States. They are adjustable rate. When you take out a mortgage in the UK, you lock in your introductory rate. I believe it's for 5 years. It might be 2. I don't know off the top of my head. But it is a short-term teaser rate, and then you automatically refinance at the end of that period at the current rate. So it's basically like an ARM is here in the States. Now, keep in mind, adjustable rate mortgages were one of the main ingredients in the global financial crisis. When interest rates had risen and all those introductory rates expired and all those payments started to increase, people couldn't make the payments and those loans went delinquent, and that caused the subprime mortgage crisis. Well, UK lenders are now halting the issuance of mortgages because they're waiting for these rates to rise. They're not going to issue a mortgage right now, knowing that the Bank of England could raise the rate by as much as 200 basis points as early as this week. So the British bond and currency markets have been in turmoil since Finance Minister Kwasi Kwarteng announced his mini budget on Friday. The yield on the UK 10-year gilt soared to levels not seen since 2008 on Monday, while the British pound plummeted to an all-time low against the dollar. Markets have begun pricing in a base rate rise to as high as 6% for next year from 2.25% currently, raising concerns among mortgage lenders and borrowers. UK lenders Virgin Money, Halifax, and Skipton Building Society pulled some of their mortgage deals to customers after the tumult in British bond markets. So they're saying, look, we're not going to give you a loan right now. We're not going to let you lock in these current interest rates for up to 5 years because we're expecting those rates to rise next week. So give us a call next week when it's going to be a lot more expensive for you to borrow money, and then we'll talk. That's what the UK is saying right now. So not good things for the UK housing market caused by this currency crisis. All right, this is not good if you're a homeowner in the UK. And by the way, there was something like 1.4 million homes are about to be refied in the UK. All of these introductory rates are about to expire. So this is a major percentage, a major portion of the UK housing market. And over here in the US, things are not looking that much better. 30-year fixed rate mortgage hit what are we at right now? 6.87%
Now,
yesterday.
when I always look at pressure on that, I always double the 10-year. And so right now the 10-year is implying a 7.5, so we have upward pressure.
Absolutely. A lot of upward pressure on this. And we've been talking a lot about mortgage rates, and we did a video a few months ago, Mish, talking about what was happening to the average payment since the start of the year. I'm not going to take you through that math right now, but I saw this tweet from Jeff Gundlach. What was his title again? He's big in the bond space. I can't remember the outfit he works for right now, but this guy is sharp, and he says the national average 30-year mortgage rate is sprinting towards 7%, thanks to 40% median home price increases over the past 2 years and the massive increase in mortgage interest rates. The monthly payment on the median price U.S. home is already up about 100% versus 2 years ago. So between the price increases and the increase in interest rates, 100% increase in the median U.S. home price. What we have here is an affordability crisis, folks. This is bad because, we were talking, Mish and I, yesterday. There's a lot of folks in Twitter and FinTwit, a lot of people whose opinions I respect, really sharp guys, are saying people have locked in lower interest rates on their houses. And, if you've got a home with a 30-year mortgage and a 2.5% interest rate, you're never going to sell your house now and go out and take out another mortgage at 7%. So it doesn't matter what happens. It's not going to cause a crash because people are going to refuse to sell their homes. And so there's not going to be any new supply. It's going to keep the prices higher. And I can understand the logic that's involved there, but you have to keep in mind prices are determined at the margin, right? Let's say on your street there are 20 houses, and let's say 19 people on your street locked in those 2.5% mortgage rates last year or 2 years ago, right? And they have no intention of ever moving. But number 20 lost his job and he's got to move to Ohio for work. He's got to sell his house. That house is going to sell for a whole hell of a lot less now because any potential buyers won't be able to afford the payments on it unless he lowers the price. So what happens to the value of your house when a house down the street from you sells for a whole hell of a lot less? Your home value goes down, folks, whether you sell or not. It's all about comps. Real estate values are determined at the margins. And just because people have locked in favorable mortgage rates doesn't mean people aren't still losing their jobs. It doesn't mean the military isn't still moving people from base to base all over the country. It doesn't mean people are still aging into or out of the workforce or people are still being relocated for their job. That keeps happening even though people have locked in favorable mortgage rates. So they're still going to be buying and selling in the real estate market. And just because people have locked in these favorable rates doesn't mean that's not going to happen. And again, it only takes one house on your street selling at a lower price and the whole street goes down in value. That's going to happen. Did I summarize that accurately enough, Mish? It's kind of how that conversation went.
No, I gotcha.
So, yeah, not good things happening in the mortgage value. And also keep in mind, Jerome Powell, straight up, he told us last week, your home is worth too much and you earn too much money.
Yeah.
His words. All right. By the way, I did not say it. I see Dad is in the comments here. Hi, Mom. Hi, Dad. I love you guys. I forgot to say hi to Mom and Dad when I started the stream. If I don't say hi to Mom and Dad when I start the stream, I get text messages. Jack, is everything all right? Are you angry with us? Love you guys.
Well, okay, so the house price index did come down a little this morning.
The house price index, was that in the economic calendar you're talking about?
It is.
All right, let's bring that up. When did that come out? That was about
About
8:30 this morning,
7 o'clock.
7 o'clock. All right, let's see. 7 a.m. Tuesday.
Well, mine says 7. It probably says 9 for you.
Oh, there we go. Home price index. Let's do the month over month one. I see the home price index for Fannie and Freddie dropped 0.6% from a month earlier in July. Wow. That's a pretty abrupt drop. Now, what was the market calling for?
The market did not have one out on this, but
Okay,
it
no
did have one
forecast.
on the price index. It went down to 16.1. They thought it was going to be 17, so that's implied about a -3 is what they're thinking, and they got a negative
Okay.
0.6.
So just so you know, this is the Federal Housing Finance Agency Home Price Index. It measures changes in the average prices of single-family houses with mortgages guaranteed by Fannie and Freddie. All right, so this is a nationwide average, and we're seeing nationwide 0.6% month over month decline, and that is the biggest decline in a long time.
Yeah,
That is the biggest decline since 2011, it looks like.
yeah. That's cliff mechanics there. That's not rollover. That's not it's getting bad.
Yeah, that's really
Yeah.
bad. Also,
Yeah.
keep in mind, this is a plot of month over month change. All
Mhm.
right. So this is the biggest single month drop that we have had since 2011. All right. I mean, if you're looking at this in a 1 year standpoint, this is the only single month we've drop we've had this year. The last time we had a month over month drop was, it looks like, mid last year. We had a little bit of a drop. No, no, that was just a slower rise. We have not had a negative number since the opening days of the unfortunate health scenario in 2020. So this is the first negative month over month number since COVID. Excuse me. Sorry. Hate to. I caught a shadow ban. I got a shadow ban in my throat. I shouldn't make jokes about shadow bans every time I do that. I end up with one. So
We ended up with one. Yeah.
yeah, this is Mish is like, Jack, change your subject before you get yourself in trouble. Don't run your mouth. All right, so that's a good data point. Thanks, Mish, for that one. All right, I also wanted to talk a little bit about Cheniere Energy, ticker symbol LNG. This is one I followed for a while on this channel, and they export natural gas from the U.S. to Europe to Asia. All right, because we talked about the dollar trade and how the dollar pullback and how it's due for a correction or at least a retest of this trend line. This is another way you could potentially play this trend. Full disclosure, I don't have a position in Cheniere Energy, but this one I followed for a while. Just looking, I mean, they've had just a monster year. Let me zoom out on this chart. I mean, Cheniere has had just a fantastic year. Now, look at this chart and then go back and look at the UUP chart. They look pretty similar, don't they? That's interesting. But right now, this one is down way off its highs. It was up around, like, I think it peaked at 178 on the daily candles. Yeah, we went as high as 178 a couple days ago. And then when this monster rally over the last couple days and the dollar started, this one was dragged lower. All right. And that makes sense because Cheniere is an exporter of energy. So they earn euros, they earn yen, and they convert those back to dollars to report their quarterly earnings. So a stronger dollar is bad for the earnings of Cheniere Energy. Well, if the stronger dollar is going to take a break and head lower, maybe some of this recent sell-off in Cheniere is going to reverse. So that's why I'm saying this is one that you might want to keep an eye on here, because if the dollar is going to take a breather for a minute, I think we could see a correction back upward in Cheniere Energy. Now, I have been avoiding this one because of this story about this formaldehyde emissions rule at the EPA, and it looks like that may be behind us. This story just came out yesterday Cheniere LNG to fix the Louisiana plant after pollution test fail. Now, this headline seems like bad news, but when you look at it, it's actually really good news for Cheniere. LNG will repair and replace equipment at its Sabine Pass liquefied natural gas export terminal in Louisiana after tests disclosed that it surpassed the newly imposed hazardous emission limits on certain carcinogens, per a recent Reuters report. However, the repair and replacement work will not have any material impact on operations. A round of testing revealed that at least one of Cheniere's turbines at its facility in Louisiana failed to meet the new norms. Meanwhile, the turbines at the firm's only other U.S. LNG facility in Texas, that's the Corpus Christi facility, met the regulations per documents obtained from state regulators. So I was worried that these new formaldehyde rules, which it's not a new rule, the rule's been in place since like 2004, it was just not being enforced until this year. And there was the potential that these new rules could force the shutdown of Cheniere's LNG plants. Well, they ran these tests. The EPA said, no, you can't have an exemption when they asked for one. They ran these tests, and it turns out only one turbine at one of their facilities doesn't meet these requirements. And they're able to make these repairs without having to shut down the facility. So what I was worried about, the EPA imposing a shutdown on these facilities, is not going to happen. The one facility, they ran their test, and they already meet the regulations. They don't even have to make any modifications. And then the big one, Sabine Pass, they only have to make some minor repairs and mods, and everything is working, and it will have a minimal impact on their operations. So the formaldehyde emissions rule that I was worried about is not going to be a material impact on the stock price. That's this one just came out yesterday, and this is a big deal. I think Cheniere Energy should be rallying just on this news alone. And then with the stronger dollar, you can see why it's up 1.5% today. Or with the weaker dollar today, I should say, you can see why that one is up 1.5%. So this is another way you could trade potentially both the energy crisis in Europe and a temporary pullback in the dollar strength. Again, keep in mind, any commodity play, anything having to do with commodities, will be swimming against the tide of the stronger dollar in the medium to long term. So keep an eye on that one. If you're going to get into a position in commodities, be ready to get out if the dollar surges higher, because the strong dollar is absolutely bulldozing everything in its path over these last couple of weeks. It's something you need to keep an eye on.
Speaking of which, take a look at the 10-year real quick.
The 10-year. Let's bring up the 10 on the World Government Bonds chart. The 10-year is at 3.914. Let's refresh this one here. Still showing 3.89 on Yahoo Finance, but that one is a little bit behind. Wow, we are just marching higher. Let's bring this up on a one day chart here. Was it the 1 day you were looking at, Mish?
No, I was just checking that it went over 3.9.
It did, 3.91. Again, my 2.2 target is looking less and less like a reality.
Well, it just may take a while.
Yeah, I mean, you could argue things started breaking a long time ago. It's not to say the
kind of my
yield
whole
reversed.
point between the chart we used to look at and the triple MRI is it's all about risk. Yep. And we're above risk. So something might break, and the longer we stay above risk, the more likely it is.
Yep, absolutely. And 3.93 now, up 5 basis points or 1.41. So are we going to get a reversal in stocks? If that yield keeps heading higher, that is going to sap the strength out of this rally real fast.
We've already peaked on stocks. It's already back below 11,000, or it was.
Yep, I'm looking at the S&P right now. It is up 40 points or 1.1% off its highs of the day. The Dow is at 29,525, up 265 points or 0.9%. And the NASDAQ back under 11,000, now up 162 or 1.5%. Again, just off its highs of the day. Let's see what the dollar is doing. The dollar is at 113.75, down about 35 basis points, but well off of its lows. So if this is the biggest rally this market can muster, then it is going to be very short-lived. So we'll keep an eye on that one. We're going to stay on top of that story for you guys. But in the meantime, there's one thing you take away. Go ahead, Mish.
It's the yen.
It's the yen. Okay.
Yen's about to hit 145.
Oh boy. Well, the Japanese government has already started intervening, so look for them to do more of that. That will put upward pressure on U.S. yields. So, look, if there's one thing you take away from this stream, number one, it is I really hope we didn't blow up that pipeline. I really hope we didn't do that. I hope we're better than that. And number two, it is the dollar is dictating the course of this market. All right. Dollar up, market down. Dollar down, market up. That is going to be the way of things for the foreseeable future. It's all about King Dollar right now. And for the last couple of weeks, this morning notwithstanding, the dollar has just bulldozed everything in its path. You do not want to be standing in the way of a stronger dollar right now. Position yourself accordingly. Not a financial advisor, not financial advice. All that CYMA stuff. But that's what I got for you.
Well, that's the whole thing of the milkshake theory, right? Is the dollar is going to get so strong because of what's going on that then all that money is going to come back at us like there's no tomorrow.
Yeah, I did a video about that a couple of weeks ago, how the strong dollar will kill the dollar because it's forcing countries to de-dollarize. Because if you need to buy food or you need to buy energy, first you need to buy dollars. And if you can no longer afford dollars because the Dixie gets so high, then you're going to look for other ways of payment, say a BRICS currency or say the rupee or the yen or any other reason. And there are plenty of people in the world who don't like us. Again, I really hope we didn't blow up that pipeline. A stronger dollar will force people to rethink de-dollarizing. And so this could end up killing the dollar in the long run. And then all those dollars start coming home because money flows to where it has utility. And if all those dollars come home, it starts chasing the same number of goods and services here in the States, hyperinflation. So hope it doesn't come to that. And I have to say thank you to Crushing Bear, formerly known as Miracle Oil. Hello, Crushing Bear. I'm digging the new handle. Says, any thoughts on Nike or Apple coming with the strong dollar? Do you believe UK banks will be in trouble with the depreciated pounds? Yes, on the UK banks. The UK banks are in big trouble. The depreciating pounds, what it really is going to... Check out that video I did yesterday, Crushing Bear. At the end of that video, I talked about how the energy crisis has become a currency crisis and now could very quickly turn into a banking crisis. Because when you get a sudden spike in mortgage rates caused by all these adjustable rate mortgages transferring over to a higher rate, you're going to have a lot of homes go on the market underwater for sale, and you're going to have a lot of people delinquent on their payments, especially considering their utility bills have also tripled. So people won't be able to afford their mortgage payments. So you could very easily end up with something resembling the subprime mortgage crisis here in the States happening in the UK because of these higher interest rates that are coming in order to fight the depreciating pound. So absolutely good idea there. Nike or Apple, I'm going to stick with Apple. Mish, you sent me a link yesterday, I believe. What was it? It was new iPhone units in China.
Yes, there was the model over model purchases went down by 11%.
11% versus it was the previous generation of iPhone, right?
Right, the 13 versus the 14.
Yeah. So iPhone sales in China, right? That's trading on the margin. That's what determines really the profitability. Remember back in 2017, 2018, Tim Cook announced a slight reduction in sales in China, and Apple stock just absolutely tanked on that news. And that was like a little bit of a slowdown. What did you say, 19%?
11%.
11%. 11% reduction in iPhone unit sales over the previous generation of the iPhone. That's a big deal. So I would not be touching Apple right now. Now, Apple, if the market is going to get a dead cat bounce, Apple is a good way to play the market as a whole. It's basically the S&P 500. So I'm talking medium term, long term here. No, I don't want to touch Apple. Same thing with Nike. When you've got core inflation, apparel sales, especially high-end apparel sales, people can't afford to heat their houses. People can't afford to make their mortgage payments. They're not going to camp out to pay $200 for a new pair of Air Jordans. Did I just make myself sound old? Are they now $300? I don't know.
300, like 800.
800. Oh, jeez.
We're starting to back up a little on chats.
Okay. So thank you very much, Crushing Bear, for your super chat, for your support of the channel. And no, I would not touch either of those stocks. And there is my good friend, Mr. Mike Bender from Robin RC Models. Where are you, Mike? Oh, wait. First, I have to say thank you to Wonder She Her for the super sticker. Thank you, Wonder She Her. It doesn't come up on StreamYard, but it looks like a pear holding a cup of coffee. Well, cheers, Wonder She Her. Thank you very much for the cup of coffee and the support of the channel. I appreciate that very much. And there's my man, Mike Bender says, good morning, Jack. First, food plants and now gas pipelines. Funny times. Interesting. I did see the story about the largest produce wholesale market in France burned yesterday. Throw that on top of all the stories about the food plants in the U.S. I talked about this in my interview with Jesse Day over at Commodity Culture a couple of weeks ago. I don't particularly buy into the story about the food plants burning down is part of this global depopulation conspiracy. Now, that being said, if there was a scoreboard behind me that had the conspiracy nuts on one side and the fact checkers on the other side, then the 2020s scoreboard would show the conspiracy nuts are out to a big lead over the fact checkers in this decade because the conspiracy guys have been right about a lot of stuff. And if you were to look at things that are going on in the world, the attacks on farming, the attacks on fertilizer, the attacks on energy, if your goal was depopulation, you're doing everything right if you're the leaders of the world. I'm going to leave it there. I don't think the food plants burning down, it's always happened, right? Food dust, grain dust is very explosive and very flammable. We train on this stuff at the fire department all the time. These things have always happened. I just think there's a heightened sensitivity to them in the press because of all the supply chain issues that have been going on. Now, that being said, that's the food fires. The pipelines, that was on purpose. Somebody did that on purpose. I hope it was not us. Thank you very much, Mike. I really appreciate the support of the channel, as always. What's up, Mish?
Yeah, I'm sorry. I do want to add that Rungus fire in Paris was bad because that I was telling you at the time that's a regional distro on top of being a market. It was huge. That's going to disrupt food deliveries all over Paris for months.
Yeah, and that was a big fire. I mean, you could tell from some of the just the size of the plume. That place went up. That was not a small little, one engine responds. No, that was a big deal. By the way, food plants, granaries, man, those fires are no joke. Those things can just blow up. That grain desk, that stuff.
If everyone goes back and look at Mythbusters, where they did that whole cloud of milk powder and then lit it on fire, that's grains too. That's any dust producing thing.
Food is fuel, folks. Carbon and hydrogen bonds.
It's all the search for energy. That's all it is.
And there is Wesley Masterson with the Command and Conquer General's 0 hour icon in his name. Hello, Wesley. He says, how would the tightening of the Fed balance sheet help or hurt the U.S. when the dollar milkshake theory brings trillions back to the U.S. market? Okay, so
can I try this one first?
Yeah, go ahead, Mish. Take a shot at it.
Well, one thing. So on the balance sheet, every time you do easing, you have to go bigger. So first it was $1 trillion, and then it was 10 trillion. Well, the next level is 25 to 30 trillion on the balance sheet, which is if they don't clear what they already have on it, that's on top of what we're already there. So we're looking at a balance sheet of 45 trillion at the end of the next cycle that may begin in January. So that's my 2 cents on that one.
So, you're alluding to the thing about QT and balance sheet expansions is the more you do it, the bigger it has to get. And
that means we have to put much more money out there. That means much more money coming back to us.
Yeah. And hey, let me bring up the balance sheet right now. You look at this chart and it shows, once you start balance sheet expansions, bigger and bigger expansions become necessary over time. All right. Now, I want to kind of granulate my answer a little bit here to your question when he says, how would the tightening help or hurt when the U.S. milkshake theory brings trillions back? Let me start in the short term, because in the short term, the Fed tightening and unwinding the balance sheet is hurting. It's making the dollar milkshake theory worse, because what we have right now is a dollar shortage, believe it or not. After printing trillions and trillions of dollars, there is a shortage of dollars in the world right now. Again, Mish's comment, you need bigger and bigger stimulus the more you do it. So there's a dollar shortage right now, which is driving up the price of dollars, i.e. the Dixie higher, the higher interest rates. All right. Now the Fed tightening is destroying dollars. So it's removing liquidity from markets. It's driving the interest rates higher. So right now the Fed's tightening is making the dollar milkshake theory worse. Now in the long term, if those dollars start coming back to the States, if the world does de-dollarize because the dollar gets so strong, people just can't afford to use them anymore, then the Fed tightening can help, because then we're going to have way too many dollars here in the States and we're going to need to burn them real fast. So when that happens, it's going to be, they won't be able to tighten fast enough. So it would help once we've tipped over that edge to the point where the dollar, that flood of dollars starts coming back home. In that case, it would help. But in the short term, it's expediting things. It's making it worse. I hope that made sense. Thank you very much, Wes.
I also say that there is one positive from this inflation. It makes our debt relatively cheaper.
Yeah. And that's why the government is financially incentivized to create inflation. Yep.
So they let it run hot and they let it get out of control.
Yes.
Because they borrowed too much money.
But now they're in the point, it devalued the value of the debt that they owed. But now, because they're raising rates to fight inflation, now the servicing cost of that $30 trillion in debt, oh boy, it's on the rise fast. It's approaching $1 trillion. Is it like $700 billion a year right now?
We have over $1 trillion in the 6-month bonds.
Wow.
And
that's all going to roll over. Yeah. So that all rolls over within a few months. So, and I got to send another one. Mish, every time I bring up the super chats, it covers you up to the nose. It's kind of funny. Thank you, Prepper Intelligence, for the super chat. It says, hey, brother, formerly Palmworks here. Okay, Palmworks. Everybody's changing their handles now. Well, welcome, Prepper Intelligence, formerly Palmworks. It says, just wanted to say thanks to you and Ninja inspired me to start my own channel to share experience in stacking and prepping. Great show today. Thank you very much, Prepper Intelligence, and congratulations on your new channel. I'm going to have to check that one out. Everybody head over to Prepper Intelligence. Wish him good luck. Subscribe to his channel. Another channel is born out of this, out of the nation. I love to see that. And I tell you, PI, can I call you PI? This overlap that I'm seeing, I see it more and more, this overlapping between preppers and finance. The line is blurring. It's becoming one and the same. And that alone, the fact that there are so many preppers following finance channels and so many finance guys are starting to prep, take that seriously, folks. That goes to show you how bad things are getting and how bad they could get. And I'm going to tell you, man, if you guys aren't of the prepper type, if you're here more for the finance thing, it's time to stop making fun of the preppers, folks. All right? I mean, I've had the buckets of rice and beans for a while now, and my friends always have a laugh at my expense. Whatever, I got a thick skin. I'll take it.
I have a life straw for water.
Yeah.
That I carry with me.
Keep in mind, those life straws, they filter out bacteria, but not viruses. Viruses pass right through them.
Or chemicals. It won't filter chemicals either, but you got to do what you got to do.
But it's better than nothing.
Yeah.
But, it's time to stop making fun of the preppers, folks, because they've been right about a lot of things. And if things get as bad as I'm afraid they could get, then you're going to wish you knew a prepper, and you're going to wish you hadn't made fun of them. So, Prepper Intelligence, thank you for the super chat. Good luck with your channel. I will head over there and check that out. That is awesome. I love to see a new channel, and he's going to learn how much work goes into making YouTube videos. It is a lot more work than you think it is, folks.
Yeah.
A lot more. All right, guys, we are going to call it there. I think it has been a good stream. We're going to wrap it up. I want to say a special thank you to my Patreon supporters, guys. There is a link down in the description below to that if you feel so inclined. Our Patreon Zoom call is tomorrow. I'll be scheduling that in the next few minutes here. Also, there's been a change to the way they bill in Patreon. It used to be if you signed up at the end of the month, they would bill you right when you signed up, and then on the first of the following month, they would bill you again. I hated that. I always felt terrible when people signed up at the end of the month, but I got an email from Patreon yesterday that they have done away with that, and now they're just going to bill you once a month on the anniversary of the day you sign up. So there is no worry about signing up at the end of the month anymore. You're not going to get double charged. I'm glad
That's
Patreon
awesome.
fixed that because I hated that. Anyways, that Zoom call is tomorrow. Thank you guys for everything you do for the channel. Thanks everybody for the super chats. Thanks mom and dad. Thank you, Mish. Anything you want to add, Mish?
No, everybody stay safe. And remember, if you can spot Mish in the wild, there's a Merc dime in it for you.
All right. I like the shiny. All right, guys. Thank you very much. Until next time, live small and dream big.